Hi everyone, welcome to today's video. So on today's video, we are going to have a very important discussion around investing in the US stock market. Now before you drop off, before you say that, you know what, I'm not interested in US stocks, I'm only interested in Indian stocks, understand it's very important. Therefore, please watch the video till the very end. Only then you will understand the pros and cons of investing in India versus the US. Point number 2, and very important point, this is not a sponsored video. I don't care if you use IND money, if you use Vested, if you use some other third party app, do it. Okay, not a problem there. The important point is that you must invest in geographies and in assets where your money grows. How you're doing it, that is secondary. Okay, of course, don't go for apps, don't go for forums that are charging you a lot of commissions. Of course, look into it, but don't get hung up on like, hey Akshat, you only use like Zerodha, or do you use like Grow, or do you use like Upstocks? What difference does that make? Use anything, okay? It doesn't matter. Similarly, if you're looking to invest in the US, understanding whether investing in the US is sensible for you or not is a much important decision rather than making a decision through which app you're doing it. I need to say this because every time the discussion starts around that, you know what, okay, can you talk about this app or that app? No, I'm not doing that. I'll have a very honest, sensible discussion with you around the US stock investing, whether or not Indian investors should start investing in the US stock markets also. Super important. Why? Because right now there is this hawa in the market that, you know what, you should just jump into the US stocks because you need to be super diversified. True, but that is only partially true. So I'll explain you all the reasons. I will speak in 3 simple buckets so that you understand all the logical points in a well-connected manner. Okay, so let's get started. And the first key point that you need to understand is the relationship between economy and stock markets. If you don't understand this point and if you start blindly investing your money in XYZ random international markets, you will lose your money. Okay, so please understand this. How can I be sure that you will lose your money? For example, if you invest your money somewhere in Turkish market or somewhere in like African market, you will lose your money. Please be sensible about it. So you need to understand the relationship between economy and stock markets. Very important point. I'm not going to bore you. I'm going to explain very practical points here. Okay. So let's first and foremost understand that what is the major difference between the Indian economy and stock market relation and US economy and stock market relation. Okay. So how do we understand this? Okay. So for this, let me take you to my screen. Right. So let's first and foremost understand the US stock market, right? So this is like US map. So many people say that I draw like Majnu Bhaiya. I will continue to draw like Majnu Bhaiya. If you don't know who Majnu Bhaiya is, watch a very interesting fun movie called as Welcome. You will understand the entire drawing fiasco there. Okay. So this is like US. Now here what happens is very simple, right? So there is something called as growth rate, right? And there is another concept called as inflation, right? Inflation. Now, when we say growth rate simply means is a nominal growth rate, right? There is one. So nominal means stated, right? Now, okay, let's not get into the economics of it. Let me explain it to you practically. So let's say that we put like $100 in the US economy, right? So you go as an Indian investor, you invest like $100 in the US economy. Then nominal growth rate is the stated growth rate, or what you keep reading on newspapers that India grew by like 22% or India grew by like 9% or US grows by like 5%. So that is stated, right? So in nominal terms, US usually grows at approximately 3%. So that's the nominal rate. Now what happens is that if you talk about inflation, in the US, the inflation is, they are trying to keep the inflation around 2%. So usually the inflation rate in the US is around 2%. So what is the real growth rate? So real growth rate means that if you take the nominal growth rate and minus inflation, that gives you the real growth rate of 1%. So this $100 becomes $101 next year in real terms. This is the real growth that is happening in your money. Okay, so 2-3 concepts. I'll quickly summarize. What is growth rate? Growth rate is the rate at which the economy grows, right? Plain and simple. For example, if India's growth rate is 22%, what it simply means is that, okay, in nominal terms, if you're putting 100 rupees in India, next year, in nominal terms, that becomes 122 rupees if the growth rate is 22%. But you need to compute the real thing. Real means that, hey, okay, great, my money grew, but every year mehengai also grows or the prices also grow. You tell me, right? For example, when you're buying burgers from McDonald's, have you seen any year when the burger prices for McDonald's have come down? No, you will never see it. That is what? That is called as inflation, right? That the prices of assets keep on going up and up and up. That if you go right now in the market and try to buy a house, you will not get it at a price that were existing back in the 1990s or even 2000s. Prices have gone up. for almost everything. That is what inflation is. And every year, every economy goes through a certain rate of inflation. If you minus the inflation from the nominal growth rate, you get the real growth rate. So real growth rate literally means that, hey, if I'm putting 100 rupees or $100 in any economy, how much money am I making next year? So in the US, you are roughly making 1%. Now people will confuse you. People will say that, you know what, that if you go to India, right? Okay, so I will draw India's map also, right? And please don't hate me for my drawing skills. Again, right, apologizing in advance. Okay, so people will say that, hey, in India, the growth rate is like massive. It's a growing economy. So growth rate is like 8%, 9%, whatnot. But also the inflation in India is 6% or 7%, right? So what is the real growth rate, right? The real growth rate again becomes 1-2%, right? That is what is happening whether you do it in India or whether you do it in the US. Now this concept is called as arbitrage, right? So arbitrage means that in real terms, if the money was growing in India, it's let's say 10%. Okay, hypothetically speaking, that you're putting $100 in India and it becomes $110 in India. And in the US, if you're putting $100, it only becomes $101. Then are people mad that they are not transferring all their money to India? If in real terms, if the risk adjusted return in India was higher, then why is it that people would not invest all their money in India? Why even countries like the US would have flourishing economies? That doesn't make any sense. So the entire argument that, hey, go invest in the US, you will get more returns, or hey, go invest in India, you will get more return, nothing like it. Okay, because in real terms, real risk adjusted terms, you are getting equal rate. Otherwise, there will be an arbitrage opportunity and all that money will flow to that particular economy. I explained this concept to you fundamentally. I hope you understand that. If you liked it, do press the like button. Helps with the YouTube algorithm. So let me explain the next point now. Now let me explain you the next point now, which is around that when you are betting on India, what is it that you are betting? Essentially, what you are betting on is that India companies are growing, right? Companies are growth companies, right? Growth companies, right? What do I mean by growth companies? So let's take the example of Bajaj Finance. So Bajaj Finance is a finance company. It's not a tech company. Let's say it's a traditional company, so to say. And it's not a very old company, right? Compared to JP Morgan or Goldman Sachs, all that stuff. Similarly, if you compare HDFC Bank, which is now one of the most popular banks and one of the most solid banks in India, how old is HDFC Bank? Again, not very old compared to JP Morgan, Goldman Sachs, all that. What I'm trying to tell you is that the Indian economy is new, right? So India is a very new country. It got independence in 1947. US got independence back in like 1700s, 1800s. So bottom line is that India is a fairly new country. It is like a very small child, right? So this child, for example, if I'm talking about Zain, my son, he will grow faster than I would grow, right? I'm a 6 feet person. How much height will I gain? I'll hardly gain any height. But the growth opportunities in specific companies in India are much, much higher. That is something that you need to keep in mind. For example, there are companies like Bajaj Finance or HDFC Group, HDFC Bank. All these are new age companies that have not existed long time back. They are displaying massive growths in India. Why? Because India, if you look at the trend, it is a growth driven trend. Why? Because India is a new country compared to the US. So this is one key point that you need to remember about trends. Now, another important point about India as an economy is that we are moving from an unorganized, right? Unorganized to an organized sector. Now you'll say why? Okay, I have put in different explanations on separate videos, but let me just give you a very quick summary here. Now, okay, so first and foremost, almost all Indians are getting an identity. Now you'll say, Akshat, have you gone crazy, right? All of us have identity. No, before the UIDAI scheme in India, many people in India did not used to have identity. For example, there was massive influx of people from countries like Bangladesh, right? And bunch of other neighborhood countries. They used to come in India. It was very difficult for the government to decipher that who are Indians versus not. So this UIDAI scheme was started, the Aadhaar card scheme, and that is the reason why all banks and other services in India are availed via Aadhaar. Because we always ask the question that why is it that Aadhaar is being given so much prominence? Because it gives Indians true identity, so to say. And this, once you get identity, it's very easy to avail services, right? So we move on to becoming more organized. Once everyone gets an identity, you can move them to a banking sector. Once people have some kind of finances going on that they can avail credit, they can give credit, then you move on to the third thing that, hey, providing services, identifying people who need government support. All this targeting of beneficiaries also kick in. So to cut the long story short, what is happening is that as we are moving from unorganized to organized, we will become more and more developed. Not because we are doing something magical, but because there is so much opportunity for growth. Okay, now you would say, okay, Akshat, this sounds great, but what about US? So can you talk a little bit about US? What is happening in the US and why should people invest in the US growth story? Okay, so in US, the way the growth happens is very different, right? In the US, what is happening is you are betting on two things. One is that you are betting on monopolies, right? For example, if I say that, hey, Facebook, Amazon, Google, Apple, what are these? These are monopolies, somewhat global monopolies. Apple products are available all across the globe. But if you pick Indian companies, you will see very few such companies. So this concept of global monopolies is there in the US. If you want to invest in global monopoly stocks for whatever reasons, US is the market to do it. That's one. Second is that the growth in these monopolies happen via M&A, mergers and acquisition. For example, if I ask you that, hey, why is it that the Facebook was able to grow so much? You will say that, you know what, okay, very dumb question. Zuckerberg is like fabulous. He got a perfect score on SAT, went to Harvard, bunch of good things. No, that's one reason, of course. Zuckerberg is super smart. But the massive growth for Facebook is now happening because of what? Because of A, Instagram, and B, WhatsApp. So that's a fact. So how is that happening? Because Facebook has grown to a certain scale. Now they are acquiring more and more companies. And WhatsApp and Instagram become two such important companies that are there in Facebook's portfolio. So what am I trying to say? That in India, if you are investing betting on the fact that Indian economy will grow, right bet. B, you are betting on the fact that small companies can become big companies, right? In the US, if you are investing from the point that, hey, will this company become a global monopoly or not? That's A. Second, you are investing on the fact that, hey, are there mergers and acquisitions opportunities available? Now, M&A works on the backside also. For example, if you go and invest your money in Facebook stocks, then the growth will not come from Facebook anymore. It will come from the fact that how many smart investments is Facebook going to make going forward. On the flip side, let's assume a scenario where a company like Coinbase in the US, which got recently listed, it gets acquired by Google, right? Then it's an acquisition happening of Coinbase. So both these type of companies are good to invest in the US market. For example, you can invest your money in giant stocks, which can become global monopolies, or you can invest and identify good target companies that are good target for acquisitions. I hope this point is clear and this should help you understand the fundamental difference between investing in India versus the US. Okay, now comes the second very important section that we should speak about is that if you are investing your money in India versus the US, how you should go about investing it. Now let me tell you a short anecdote of people who keep commenting on my videos that, hey Akshat, you're mad, you have like 65 stocks in your portfolio or like 70 stocks in your portfolio. Look at Warren Buffett, he only has like X number of stocks. Okay, first and foremost, if you are investing in India, then you are likely investing in small cap and mid cap companies, so to say. If we keep Indian companies on a world spectrum, if you compare something like TCS and compare it with the market cap of Microsoft, it's a micro company. So when you're investing in Indian stocks, you need to be diversified. And it's very similar, and let me explain it with an example. So let's say that you have to invest 10,000 rupees in an SIP mode right now in the Indian market. And you have option 1 that go invest in large cap stocks. You will be okay just buying and investing in one mutual fund or two mutual funds. Why? Because you are sure that, okay, you know what, they are anyways going to invest in large cap companies. So I feel safe. I know HDFC Bank, I know this, I know that, right? Option B, if you have to invest your money in mid cap and small cap mutual funds, then the likely scenario is that you're going to invest and buy multiple of those mutual funds or many mutual funds. Why? Because you want to be diversified. If you don't know about small companies like Delta Corp and bunch of other different organizations, you will feel that, okay, let me stay diversified. That's the same rationale at a world level. If you're investing in India, then you have to be diversified. That is my philosophy and that is what I would also advise to you. Now, why am I saying it? Because in India, compared to the US, there is lack of data. There is lack of transparency. There is no specific whistleblower mechanism. Now, please don't comment that, hey, government has instituted this, that. Yes, but in practical, does it work? No, it doesn't work so easily in India that way. A recent example is Ujjivan Small Finance Bank. No one knew that such a bad situation will come up with the management of Ujjivan Small Finance Bank. By the time the news broke, everything went haywire. Because this type of stuff happens because there are no auditing standards. Even if you take a look at back in 2014, 2015, you have large banks in India like Punjab National Bank. People like Nirav Modi, Mehul Choksey, they are taking money from these large public sector banks and running away to foreign lands. We don't have that structure, we don't have that transparency. Therefore, in India, for a retail investor, it is sensible to stay diversified compared to the US, where investors have the option of staying concentrated. Right? There are two types of investment you can make. Diversified means that you're buying multiple stocks. Concentrated means that you are following Warren Buffett's philosophy that, hey, okay, I'm going to buy 40% Apple of my entire portfolio. So please understand that point, very, very important. Otherwise, if you blindly compare Indian market to the US market, you will make a lot of mistakes. Okay, so if we summarize all this, so what is the expected returns you can make and what is the investment strategy you should take? Okay, point one, if you are an Indian, then majority of your money should be in Indian stocks, right? For a wide variety of reasons, because there is not smooth transaction from India to the US. Now you'll say that, hey Akshat, you know what? There are all these massive apps. They are allowing you to take money from India to the US very smoothly. Yes, all that is true, but how much money are you taking out? Very minuscule amount, right? Because if you take certain amount of money outside India, I think that limit is 10 lakhs. If you take money in excess of 10 lakhs, then as a retail investor, you have to fill out and declare all that stuff. It's a headache, right? It's not a smooth transaction. So that is point one. Point two there is very simple that, hey, you understand the Indian market more. If you're okay following like US news every now and then, if you understand that how the US politics work, because politics impacts economics and economics impacts stock markets. So the flow is that way. So please don't discount the fact if you don't understand the politics of the US at all, if you have no understanding on ground what is happening, and if you're going and pouring your money after money in the US stocks, you are in for trouble. So please be sensible. Please don't jump the gun just because everyone is doing it. I'll also jump. I'll also start investing like truckloads of money into the US market. Don't do that, right? There is ample opportunities for growth in India also, in the US also. So play the game that you understand. That is more important. Okay, this brings us to a very important question that, hey, what is the expected return that I can make in India versus US? Honestly, you can make any amount of return because there is no upside to stock. It really depends on your stock picking skills and it indirectly depends on what you're understanding versus not, right? But if you're betting on economy, if you're doing a macro bet that, hey, should I invest in India? Should I invest in the US? If you're taking broad bets, then take it in India, right? So that is what I would say. So I hope you found this discussion to be insightful and useful. Let me know and I will see you the next time.